I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. To round out the week, it's Friday, January 22nd, and we saw some fireworks in the agricultural space, grains and livestock. I want to touch on both of those. We're going to touch on corn futures a little bit, as well as live cattle and lean hogs. We've got the March corn contract chart pulled up here, so we'll start with that one. Obviously a big down day. What caused today's move? Was it a fundamental headline? No, absolutely not. And don't be looking for headlines to explain today's price action. Today was all about technicals and money flow, as well as options expiration, something that we talked about in our interview with RFD TV and in our daily reports. This can often have a big impact on prices, and I think that was one of the reasons why we saw some excitement and fireworks in today's session, as well as the technical and money flows. And we kind of laid that out in our daily grain express. Now, we have had our bias as neutral here for the last several weeks, and we do that for a reason. We understand that there's a good fundamental backdrop to the grain markets, but realize that the funds are overextended and we're in heavily overbought territory, and risk can happen fast. So we're not going to be blindly bullish this market. We'd rather be a little bit more prudent and manage our risk, because as I mentioned, risk happens fast, and that's exactly what we saw today. As far as the technicals go, we're hovering near our pivot pocket this morning, 517 and a quarter to 522 and a quarter. That was this gap, and which then became support here over the last week. A break and close below this pocket could spark additional long liquidation from the overextended funds. The next support pocket we have listed below this is 497 to 502 and 3/4, which is a breakout point from that USDA report. And admittedly, we weren't looking for this pullback in one day, but nonetheless, here we are. So where do we go on Sunday night? That's going to be the gazillion-dollar question, and probably has a lot of people on pins and needles ahead of the weekend. We wouldn't be surprised to see maybe a little bit of follow-through pressure. That's the bottom end of this range here, that 490 area, but I think eventually we could start to consolidate a little bit, and I think that would be relatively healthy for the market in the very near term. So that's what we're looking at for the corn market as we rounded out this week's trade and going into next week's trade as well. Managing risk, a key priority not only for traders but also producers. You're going to want to keep a close eye on that. So that is corn. Jump over here to live cattle, and we've got the April live cattle chart pulled up here in our daily livestock roundup. We've been talking about not really having as much faith in the February and being more optimistic further out in time. The deferreds have performed well, but that February has outperformed, which has been a little bit of a shocker considering the cash market. Most of it coming in 109 to 110 this week. In the February futures, just about 2 weeks away from being in delivery. So a big gap there, and I'm surprised to see February trade that high. Nonetheless, we're still optimistic, looking a little bit further out, building positions that we don't really have to worry about on a daily basis. In the April contract and our daily reports, we talked about potentially breaking out above this 120 range, accelerating another move higher, and that's what we got today. Breakout move, got some momentum traders involved, and maybe squeeze some shorts out of their position ahead of today's cattle on feed report. We bumped up near this high from last February, and I think we can eventually chew through here. I don't know that it's going to happen right away on Monday, because the cattle on feed report was slightly bearish, but who knows how we're going to get the market to react on Monday. Overall, looking further out, not only to April, also to June and August, I think that we can continue to see fund participation really pick up. The participation from the funds and the livestock sector has been non-existent for the last several months, and we've seen anything from dairy to lumber to grains to Bitcoin to cotton to cocoa see extensive moves to the upside. Livestock has not gotten that yet. I'm a firm believer that we will see that money flow come into these markets and continue to keep support below the market. So I think pullbacks will be buying opportunities going forward on that front. Another thing I want to note that I'm going to have to look a little bit more into, looking at the price limits for Monday's session, we've got feeder cattle right here at expanded limit, live cattle at expanded limit as well. Didn't close limit up, so I'm going to have to look into that a little bit closer and get back to you guys on that one. I do want to move over to the lean hog market. Lean hogs is we've been pretty optimistic on as well. That April contract really accelerating to the upside here over the last 3 sessions. This was kind of a congestion area, 71 to 72. We talked about the bulls needing to defend that to stay in control. And if we can get out above these recent highs, 74 to 75, which was the highs back in October, we could start to see momentum traders jump on board and some shorts get squeezed a little bit. Inverse head and shoulders. We typically look at a head and shoulders the other way. This is basically an upside down head and shoulders pattern that we're seeing. I think that's pretty darn bullish. We've also got some headlines of swine fever picking back up, so adding some support to the market. And again, as mentioned with the live cattle market, we think that the money flow and the funds could be looking to the livestock markets to find a little bit of value. So that's what we're looking at as we head into the weekend and kind of into next week's trade. If you have any questions, please give us a call. Shoot me an email, oliver@bluelinefutures.com. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.